Right now, we are living in extraordinary times that demand a reshuffle. Well, swapping out some bonds for gold and some US tech stocks for Chinese ones could offer you a better hedge. You wonder why? Inflation is coming and you need to act accordingly. What's up, guys? Welcome back to Glory Investing Show. In our today's video, we will talk a little bit about inflation. However, before we go any further, make sure you give this video a like and don't forget to hit that bell icon so you never miss any updates. Now, without further ado, let's get into this. First of all, we need to discuss what experts think about this issue. Well, a Fortune SurveyMonkey poll has concluded that a majority of US citizens are concerned about inflation. In May of this year, Treasury Secretary Janet Yellen stated that interest rates could rise. However, Yellen then said, "I don't think there's going to be an inflationary problem, but if there is, the Fed can be counted on to address it." The Federal Reserve also sees prices rising at a faster pace this year. However, Chair Jerome Powell says that this is transitory inflation. As the economy hits full gear, prices for everything will increase. For example, various reports suggest that lumber is already up 280% since the coronavirus pandemic hit the world. So, the easiest definition of inflation is too many dollars chasing too few goods, right? Right now, the economy isn't producing enough goods and services to fulfill the requirements of people. The best estimate shows that gap between actual output and potential output is around 2% of GDP during the first quarter of this year. This is equal to nearly $313 billion. And in order to close the gap between actual GDP and potential, the government is shoving dollars out rapidly. The budget deficit was $226 billion in April. According to a report published by Forbes, if government spending is even a little bit stimulative, another month or two of this pace should do the trick. But the Federal Reserve is adding to that fiscal stimulus with monetary stimulus by buying bonds and mortgage-backed securities to the tune of $128 billion last month. It is worth mentioning that the Federal Reserve is printing money virtually to pay for these bonds. Yep, the people at the Federal Reserve are intelligent, well-intentioned, and smart. However, they're also imperfect, and this year these people are wrong about inflation. Fed Chairman Jerome Powell stated, "If it turns out unwanted inflation pressure arises and they're persistent, we have the tools to deal with that." Yeah, but the problem is, the Feds will not use their tools on time. They're going to wait until inflation accelerates. So, what do people think about this whole situation? Let me tell you that Fortune teamed up with SurveyMonkey to find out the answer to this question. And according to their poll, 87% of the United States adults are concerned about inflation. In fact, 58% of people who responded to the survey said that they are very concerned. Why is this important? This can already change consumer behavior. Just think about it. When people are afraid of increasing prices, they tend to spend money faster to lock in a price. This eventually results in bidding wars on things like cars and houses, which ultimately worsens the situation. It is important to note that Americans' view of the economy often depends on whether their party occupies the White House or not. 75% of Republicans said that they were very concerned, while 42% of Democrats and 61% independents have the same views. I think that inflation is already impacting us. According to reports, the median sales price is up to 16% as compared to last year. The number of house sales is down more than 50% year over year. And moreover, there is also an incredible amount of pent-up demand in the service side of the economy. And we are already seeing a massive rise in booked flights and increased flight prices. However, the biggest price hikes are in commodities such as steel, corn, copper, etc. And lumber is on the top. The price per 1,000 board feet of lumber soared to an all-time high of $1,414 in May of this year. And experts think that this is the result of an unprecedented mismatch in supply and demand. During the last 10 years, it has almost been too easy for US citizens to manage their wealth. Well, the United States boasted the best stock market in the world in bonds. However, we are now living in extraordinary times and inflation is coming, which will change everything. Think about it. The pandemic has impacted the world and we are witnessing a Cold War between the two largest economies in the world. The world is seeing disrupted supply chains, border lockdowns, and restricted movements in labor. And we all know that war is inflationary. China's Wuhan produces cheap car parts which will no longer be available to people in the United States. Moreover, your French wine would cost you more as transportation logistics get trickier. And right now, the United States indeed has an absolute advantage with chip and robotic designs. But that edge is now slipping away. According to a report published by the Economic Times, while Washington is wrangling over trillions of dollars of stimulus to fend off a recession caused by waves of coronavirus pandemic, China, which has the pandemic relatively under control, is only strengthening its tech resolve. For Beijing, it's killing two birds with one stone. The $1.4 trillion hard tech investment is the nation's new fiscal stimulus package. Instead of building more roads to nowhere, China is installing 5G base stations. Let me tell you that US stocks need to be diversified. Big tech has become too dominant and investors need to start focusing on other options as well. Firstly, bonds are no longer effective equity hedges in this ultra-low rate world that face inflationary pressure. In comparison, gold could do a better job. After the collapse of Lehman Brothers in 2008, gold broke out and continued marching higher until September 2011. And since we're technically at war, it might be a better idea to hedge against the possibility of losing. As I have already mentioned, diversification will help you manage your wealth efficiently. I would highly recommend that you invest in gold as well as some Chinese companies. You might also want to note that inflation can help investors make huge profits. In fact, there are a number of asset classes that perform well in inflationary environments. Tangible assets such as real estate and commodities have historically been seen as inflation hedges. Real estate is one of the best choices, not only because of the increasing prices, but because real estate can also help you earn rental income. And although the currency is having problems, gold and other precious metals are also better options because of their rising prices on global markets. You can either purchase gold directly and keep it in your house, or invest in the stock of a company involved in the gold mining business. Moreover, you can also invest in a mutual fund or exchange-traded fund that specializes in gold. Commodities include items such as soybeans, cotton, and oil. And just like gold, the price of oil also increases with inflation. Oil indeed has a strong appeal to investors when prices are increasing. I would also recommend that you invest in inflation-indexed bonds. And if you're planning to invest in stocks, remember, focus on companies that can pass their rising product costs to consumers, such as those companies in the consumer staples sector. Well, that will be all for our today's video, and thanks for watching it. If you liked it, make sure to give it a thumbs up and share it with your friends. Also, let us know what you think about this in our comments section below. Lastly, if you have not already subscribed to Glory Investing Show, subscribe to it and press that bell button so you will be notified each time we upload an interesting video on this channel. And while you're here, click to watch one of these two videos that are appearing on your screen. We'll see you there. Take care and stay tuned.